England and Norway's central banks holding rates steady this morning as the Bank of Switzerland made its second cut of the year. Here in the U.S., traders pricing in September for the first rate cut. That's according to the CME Fed Watch tool. Here to discuss the global divergence that we are seeing, we have Christian Nolting. He's the Global Chief Investment Officer at Deutsche Bank. Christian, thank you so much for being here. Let's start on this domino effect that was supposed to be kicked off here, right? Allegedly, it was going to happen in Europe after the Swiss National Bank started. Now it's continued. Norway didn't follow. Neither did the Bank of England this morning. Are these international central banks kind of waiting on their own inflation data to come before continuing to cut, or are they waiting for the Federal Reserve?
Yeah, you would always have said probably the ECB always wants to wait for the Fed to cut first, which historically has been the case. Now you've seen the ECB cutting first. I think what the central banks need to do to look, indeed, as you're saying, at their own economy and what they need to do. So what's the inflation picture? And I think especially for Switzerland, right, they have cut also to weaken the currency a little bit because inflation was not a massive problem in Switzerland. So they had some room to go and they achieved that. So, but in the last weeks, the currency was strengthening. So I think that opened for them to cut one more time here, which they did today. And you see the currency weakening a little bit in order to get, again, some inflation in, because it's not that they are so much worried about inflation. That's probably different in the US, where, of course, you need to look from a Fed perspective. That's also our view. Inflation is quite sticky, so you cannot just cut 6, 7 times as the market was pricing at the beginning of the year.
What do you make of the staggering that we may see in rate cuts going forward, Christian?
Yeah, I think central banks will have the room to cut, but we are a bit cautious that there are many cuts to come, because I also think we are not in a situation where the central banks are fearing a massive inflation coming up, and hence you see a full cutting cycle. On the opposite, right, we are seeing inflation is quite sticky. The labor market, as you just mentioned, not only in the US, by the way, also in Europe, is quite sticky, stable, which, by the way, is not the worst news. So from that perspective, why would you cut so much as a central bank? So we think over time, and maybe that's 1 year time horizon here I'm talking about, we could imagine that central banks like the Fed, like the ECB, are cutting 3 times over the next 12 months. So that's a little bit our projection.
Well, I also want to talk to you about the global election picture and the volatility that could cause for markets. It did seem like the French election outcome, particularly the snap election move from Macron, did take people by surprise. Which upcoming election globally are you telling clients to prepare for, to not be taken by surprise for the potential outcomes?
Yeah, guess what? I think it's the election in the US. Although, of course, there's a lot of interest here in election in France. You've seen spreads between French OATs and German Bunds are widening to literally record levels. Last time you've seen them at these spread in 2011. So there was, of course, some anxiety about what happens to markets then. Then there's the UK election coming up, also very close on July 4th. But what I discuss with clients and where they ask most is and remains the US election, I think, quite clearly.
Well, it's interesting you bring up the U.S. election. In our final minute here, I'm curious from your perspective. Every leader does kind of want to avoid a Liz Truss moment where you bring out the bond vigilantes. Do you think that could make leaders who do come in a little bit more moderate than what the market may be pricing in?
Yeah, I think yes, absolutely, because you have seen now statements also from France, from different parties. We will, of course, need to look what's going on. You see that in the UK. And of course, US, I wouldn't be surprised to see, let's say, very surprising immediate reactions after an election. So from that perspective, yes, I think there was clearly a learning, and I would be really surprised if there's immediate action coming. And by the way, in France, it's not even possible if there's a change in government. There needs to be some time to build some things in. And from that perspective, I wouldn't call for next day immediate volatility.
All right, we're going to have to leave it there, Christian. Thank you so much for joining us. Great insights. That was Christian Nolting. He is the Global Chief Investment Officer at Deutsche Bank.